in my view, the term itself, financial inclusion, is still utter passe now and quite outdated. And we really need to be shifting the conversation. And we, in Zimbabwe, with our platform as EcoCash, our circumstances could have been unique in that we were coming from hyperinflation, and then the advent of our digital technology on the backdrop of telco infrastructure helped us to redefine trust in terms of consumer transactions. But beyond that, I think what technology was also able to do, correlated and interlined with innovation, was our ability to build an ecosystem. And once you've built a deep enough ecosystem, which is wide enough, you really start to think beyond financial inclusion. And that's the place we're at today. Because when you're processing about 85% of the GDP, it's no longer just about technology and FinTech. It becomes about citizens financing. The money really belongs to the citizens. What more do you offer the citizens apart from the basic financial inclusion, which is maybe peer-to-peer transactions, you're buying with airtime, and we need to start thinking about FinTech in that realm. And we can talk a little bit about that as we proceed with the PowerPoint.
Tesi, how do you think about it? How do the innovators in your ecosystem think about it?
I think a couple of great things have been said. One is Alex talked about broadening the services that are available, the array of services that are available, and Natalie touched on the ecosystem. And those are both very important when we think we need to move the conversation and not just talk about inclusion, but talk about prosperity in general. And what we've seen in Rwanda is there's a big push for zero trip, zero paper, zero cash. So it's not just you can digitize financial services, but there needs to be more than what makes. If you don't digitize the whole journey, there's only so far it can go. So what we're seeing is a big push by the government to let's bring services online. We have close to 100 public services that are online to date. And then what this starts to do is for our ecosystem of young innovators, there's a lot more you can plug into because the government can't be responsible for digitizing everything. So that creates opportunity and demand for young innovators, for tech companies, for startups, whether established or not, to really come and plug in, and then you can bring them along on this digitization journey.
Did you say zero trip? In other words, no travel. It's all here.
So right now it's half a trip. So instead of before, for instance, if you wanted a birth certificate, before you would have to go apply for the birth certificate and then come back in a few days to get the birth certificate. So today what you do is you get on the platform, you apply for the birth certificate on the platform, you pay on the platform, and then all you need to do is go back to collect.
Now we're down to one trip.
Yeah, so it's now just one trip.
Right.
So we'll get to zero trip. We still have, it's not yet fully self-service. They still are largely dependent on agents in rural areas where digital literacy is still low. But eventually the goal is using these agents to also increase the literacy level so that people can also start to pay, especially in the rural areas, can also trust that they can pay online for these services. So it's a journey, but the goal is zero trip, zero paper, zero cash.
I like it. It's catchy. Natalie, I want to come back to you. Zimbabwe has been a unique case study, to say the least, in financial services. Hyperinflation, massive liquidity problems. If you ask the traditional banker, when they look at Zimbabwe, can you do successful financial services in this country? I would say probably 99 out of 100 bankers would say, don't touch it. Yet you guys have, as you've just mentioned in your introduction, have made an enormous success of it. What are the lessons for us? Tell us a little bit about the journey and how the challenges played into your success.
And for us, that was the real opportunity. The opportunity was how technology can solve for imperfect markets. An imperfect market for us was financial services at the time, where only 11% of Zimbabweans at the time of hyperinflation were officially banked. And most of the country's financial services activity or the economy was in the informal sector. Now, when that small segment of the formal financial services breaks down, you have a whole country broken down. And for you to be able to rebuild it, technology gave us the opportunity to include everybody so that the broad base of national deposits could actually lift up. And that's what the EcoCash platform was for us. And hence, coming from only 10% financial inclusion today, 90% of the adult population in our country is financially included. And the journey started really simply. It was about how do we get money from one place to another, from the sponsors in the urban areas to the beneficiaries in the rural areas. So your basic P2P services. But that happened so quickly. And we realized that as an innovative platform, we had a responsibility for ecosystem building. This was not just about offering convenience. And so we started introducing other use cases like merchant payments. Beyond merchant payments, we introduced savings. And today we have the largest base of savings in the country that sits at 1.6 million customers. And it's a huge portfolio of savings that all banks have put together. And once all of that had happened and we had a really healthy ecosystem, we were sure that one of the responsibilities we had on that platform, running most of the deposits for the country, was to make sure that we're responsible enough with citizens' money. Because actually what happens at the end of the day, when you have a big financial services platform, and what banks failed to do was invest well with that citizens' financing. And so we launched the first digital credit bureau on a mobile cell phone 2 months ago. We also launched a capital bond, an equities bond on our platform, and there are a few things that we will be working on, but we're really transitioning from basic inclusion to figure out how we go into wealth management, to figure out how we go into insurance. We have the largest insurance platform as a telco today in Africa by number of subscribers. And so we're going beyond just the basic inclusion to providing the breadth and services that you can get in advanced financial services as you would find in any developed country, really.
So Wayne, let me get back to the bankers for a moment. How far can this go? If you had to sort of cast from a Zambian perspective, sort of cast into the future, what do you think is next? Where does it go, and who will you be working with to get there?
So I think the interesting thing about mobile money and the banking sector across the region, Zimbabwe, Kenya, or anywhere, Zambia, I think there's a big drive, a deliberate drive to get collaborations going on. I think it's becoming very clear that to deliver efficient services, no single institution can deliver a single product. So I think the key theme that's coming clear across the region is there's a lot of collaboration that's currently happening between mobile money players, between banks, between FinTechs, and the idea is everyone owns a specific area of expertise. So if you take, for instance, the telcos generate billions and billions of data points, which can be used to refine much more advanced products. Now, these are some of the things that traditionally 5 years ago didn't exist. So now, the whole context around saying, picking alternative vertical business competences, bundling them together, and being able to co-create with third-party players is a key theme that I see happening in Zambia and across different regions. Already we've started working on solutions. As a bank, we're working on solutions where we're looking at providing switching services for third-party fintechs, as an example. Because you don't really have to solve every vertical industry's business from a bank's perspective. All we need to do is to provide the rails, which are open APIs, to connect it to the banking platform and the system for us to enable transactions to be able to happen more efficiently.
So the logic is you don't have to out-innovate the innovators around you, you just have to make it easy for them to do business with you.
Absolutely, and that's the secret key and the secret ingredient for the future sustainable solutions. Without co-creation across different vertical expertise, you tend to stagnate development. No bank is going to solve the smartest insurance solution. So it's now a question of how do key vertical industries work together to co-create products going forward through open API.
So you mentioned open APIs. Where's your bank with open APIs today?
So we've done quite a lot of work. So we've just recently launched an innovation lab, and in our innovation lab, we've basically created what we're calling our sandbox. And we've partnered with a lot of universities in the local landscape. And the idea is we're trying to create an innovative hub. The end state is we're looking at fostering an ecosystem environment. The idea is, from our innovation, what we've done is we've created a platform, first of all, that connects into a formal financial system. Zambia's already, Zanaco is already the biggest bank by customer numbers in Zambia. That gives us, and FinTech's capacity to connect in to a formal financial institution. I think we talked a little bit about this earlier, around some of the challenges that FinTechs have to find established entities where they can plug into. So we've already created what we're calling our sandbox, our environment, where now we're partnering with hundreds and hundreds of young innovators across the region within Zambia to enable different financial solutions.
Tesi, let's go to Kigali. What's happening there? And I'm particularly interested in how you think about the role of physical space in fostering innovation.
Well, first of all, welcome Zambia. Zanaco is welcome to Rwanda.
I'm coming, ecosystem. I'm coming.
So I think that's exactly what we're trying to do. How do you use the built environment to foster innovation, co-creation, and collaboration? What has historically happened is everyone has tended to work in silos, whether it's our academia, whether it's our private sector, and now you have these new startups. They might have the products, they might have the technology, the ideas, but specifically in FinTech, they don't have maybe the capital requirements or the distribution and the network that's required to scale. So how do we use the whole idea of Kigali Innovation Cities, that you have these universities that are producing great talent? So we have Carnegie Mellon University from the US, their Africa branches in Rwanda. We have the African Institute of Math and Science, African Leadership Universities, all these great universities producing great African talent, mostly in STEM. And then how do you connect them and make sure that there's a flow of research, of ideas, of talent to the private sector, to startups, and vice versa, right? How do when I like that you're working with universities, because we need to see more why the private sector should constantly be working with academia to source ideas. So if we really want to think about what it takes to innovate, collaboration is important, co-creation is important, and we think breaking the silos can start with, if you have at least a physical space for this that can foster it, then it starts to, I guess, reduce the barriers to collaboration that we see today in our ecosystem.
So the academics, the startups, the innovators, the big companies, what about public sector? How do you connect them in?
Public sector is a big demand driver for innovation. At least in Rwanda, we've seen the private sector take the lead in being, the public sector take the lead in being more innovative and seeking solutions. And also seeking talent from these great places. So I think the public sector has a couple of ways that they can get involved. One is from the regulatory standpoint, just making sure that the environment is conducive. The second is, seeing yourselves as actually customers for these solutions as well. And then the third is just constantly thinking about how you move that needle. I think being in Singapore, where the public sector is willing to even disrupt themselves, I think we're also constantly looking at that as one and saying, what is our vision and how do we make sure that technology is a key driver of us achieving economic transformation? So you end up starting to think about what are the new ways that we can actually create demand for technology and create change.
So Natalie, just sticking with the public sector for a moment, EcoCash became systemically significant, far beyond what everyone would have predicted. How does that change the relationship with the public sector, and what is the learnings you could share with us on particularly relationship with the regulator in such a significant, systemically significant position in the economy?
I think one of the key lessons we learned for startups or FinTechs and financial services is to think about building our businesses with the end in sight and thinking about them in a way that we build systemically across the ecosystem and the value chain divide. And one of the things that helped us to be as prolific and as ubiquitous as we are is that we not only just onboarded the customers, but we created the distribution network. So we're touching on all of the lens of the consumer aspect in terms of financial transactions, but we're also touching on the economic activity of the supply side transactions. So we're bringing into the fore the retailers, the wholesalers, and then the consumer transactions, the corporates intertwined, and that really becomes, sort of the pivot and the bedrock of economic activity. And if you grow a systemic business or value proposition like that, you are not going to be isolated from the regulator. And so we've attracted the scrutiny of the regulator for the right reasons, of course, and that we worked with the regulator very successfully to support the financial inclusion strategy that we had. But later in the journey, where it's almost become mature to say, it has also caused the regulator to think a little bit more about where we fit in to the whole spectrum of the monetary authority. And this calls for what I would like to describe as governance innovation. And we as a private sector player have had to be prepared to educate the regulator on how he too can be innovative in his governance. And it brings us to the whole aspect of RegTech. So while we talk about FinTech, while we talk about IoT and the dynamic disruption of technologies, we really have to be pushing the conversation on regulatory innovation, on RegTech, and making sure that our innovation and the products and services that we launch are developing in tandem with the evolvement of the regulation that is required to be able to support this. So we're constantly working with the regulator to figure out how we can ensure that the stability and the risk management side of the monetary ecosystem is kept balanced, while at the same time we're not throwing out the baby and the bathwater. And to be fair to you, that is a thin line. And achieving that thin line between private sector and the regulatory body takes a lot of work on both parts. But what I can say is that the fintechs and the private sector should really be leading the conversation on governance innovation and RegTech to ensure that we're developing the environment that enables our businesses for sustainability so that we can build to last. And I'm sure Mark Zuckerberg can tell you enough about that. Uber in other markets where they faced peculiar challenges can tell you enough about that. And those are the real lessons that we should be thinking about and looking at the end in sight as we build for disruption.
Natalie, what I really like about what you're saying is this mindset of partnership. The truth of the matter is that we're all on an adventure, the outcome of which we don't know. We're all learning at an increasing pace, or at least that's the way it feels to me. And the only way to go about it is partnership, right? Getting on the wrong side of the regulator just doesn't work for anyone. Alex, you guys have now worked for years in a legendary partnership between a mobile operator, the Safaricom Group, and ACB Bank. You've been hugely successful in that partnership. Some learnings from partnering between a bank and a mobile operator, that's not something that's been universally the easiest thing to do.
So I think maybe before even I elaborate about that, I just want to expand the spectrum and speak more about the partnership that we've been able to do from a KCB perspective. Of course, partnering with Safaricom has been king, and that's what has led to our success. And of course, they bring in the mobile ecosystem, we bring in the banking experience, and together we're able to offer innovative and relevant products to our customers. But from a KCB perspective, there are also other partners that have been key to us. We, of course, from both private and public, we have FinTech that we collaborate with to drive innovation. These are small players who are more innovative, who are agile, who are able to come up with products in the market. Like our mobile app is driven by one of the FinTech players in the market. We have a solution for the county, we have a solution for agency banking, which is just extending banking beyond the reach of the brick and mortar to respective businesses closer to our customers, being driven by one of our small FinTech players that we work with. We also have collaboration with our development partners. We have an innovation around financial inclusion for the agricultural space. We have a product called MobiGrow, a partnership between KCB and MasterCard. And by the way, in fact, my chance to speak here today is because of our closer collaboration with CPK, we worked together on the Afro-Asia festival that happened in July, which is going to happen again next year in July. So we are here under the invitation. So when you look at our success, it's been a lot of collaboration and working and support from the regulatory environment. So when you look at the way the world is going and the success in this segment, is you have to build an ecosystem of partners, and there has to be trust. And you have to know your play and the value each of you brings to the table and be able to work together. Of course, leadership is key, because the two leaders have to be able to shake their hands and say, we'll make this happen, and it's for the good of the nation, good for the country, and for our people.
If I can move to a slightly more controversial topic, and that of data security and privacy. There are those who would say, don't worry about that now in Africa. There are too many people who still need to come in, and people really don't care about that. I'd love to hear views and invite anyone to share with me. What is your perspective on the importance of and how we need to think about the trade-offs of things like privacy and data security in developing FinTech? Tesi, do you want to kick off?
I don't think it's a conversation you can defer. Even when you look at just your simple feature phones and USSD, there's still a lot of trust where people at least will give their mobile money number to someone else to support them. And that's more of a literacy issue, but it will, continue to compound when you think about people then getting online. So I don't think it's a conversation you can defer. When it comes to one, literacy, just educating the public, they need to know to protect themselves and to protect their data. I think the second piece is now, yes, we need this data, and the mobile companies have a lot of data that we can use for analytics and that can advance inclusion. But we do need to see, and that's part of the conversation with the regulators, is how is this data used? How are you protecting the customers? So I don't, it's always a balance. You need consumer protection, but you also want to enable disruption and you want to enable inclusion. So I think let's not wait for this conversation to happen. Let's start to have the conversation now, and it's also another point of co-creation between the private sector and the regulators as well.
Right?
Yeah, that's a really loaded question, and I've seen it from both sides. So a couple of years ago, I had a conversation with the regulator around around driving a sustainable financial inclusion product, like a micro-lending product, and being able to share consumer data. So the theme was really about, regulators had a lot of sensitivity around the model in which the micro-lending product works. So there's a set of data points that get sent out prior to the scoring and the consent of the customer. Now, the topic is really about metadata. So metadata gets transferred for a micro-lending product to exist. Because micro-lending is high-velocity product. Now, you cannot wait to score when the customer consents. So the topic is really about, can I share with you the data prior to the customer's consent? So, I mean, it's a sensitive area, because the context is that if I don't have the data to score, I can't build the product, because that's the only way the product works. So some of those modalities had to be thrashed out with the regulator. The good thing is that I think in Zambia, the regulation is relatively skewed towards driving financial inclusion. So we are cognizant that there is a big problem in the local environment. So Zambia is currently sitting at about 38%, and that's a big improvement in the last 5 years. So we're sitting at 38% financial inclusion. We've still got a long way to go. The government has got deliberate initiative to driving that. Now, giving assurance that the data is going to be used for the right things, under the right conditions, is a key topic that I think everybody is very concerned about when you look at data security. But ultimately, I think the regulators are slowly starting to find that middle ground that will allow innovation to continue whilst driving a discussion around keeping customers' data also quite secure. So it's a double-edged sword, but I think if managed correctly through regulation, through partners working together, great opportunities for different agendas.
I think it's two things really. It's an opportunity, and there's also the mechanism to this opportunity. And quite frankly, data is the elephant that is sitting in the room when we talk about technological innovation. Now, Now, the UN Secretary General has put together a digital financing global task force that has been running in the last 2 years, and I have the privilege of sitting on this financing task force, which has just launched its draft report. And the research that we came out with on this draft report is that 90% of the available data today, which exists in the world today, was only created in the past 2 years. And that by 2020, 60% of the global GDP will be digitized. So you can imagine in the next 2 years how much more data we will have. Now by 2025, there will be 75 billion connected devices around the world, and the global volume of data available is going to reach 40 zettabytes. Now, as if that wasn't enough, if we come home to the African continent, there are almost 900 million mobile money accounts in Africa, which means 772 deployments across the countries, processing $1.3 billion daily of transaction data only before we get to communication data over Facebook and WhatsApp and over robotics and the value of other things that you could even think about. And for me, the conversation is, this is the opportunity that could be harnessed, particularly for Africa, knowing that by 2050, it will be half of the world's population. What we can do with data in terms of offering better products and services in financial services and across other laterals and verticals is something we cannot even, we can't start to think about. But the opportunity is there. The mechanism is in the regulators. You talked earlier about, private sector not being on the right side of regulation. Actually, I think it's more dangerous for regulators to be on the wrong side of innovation. So we really need to be thinking about that. We need to get regulators to move as quickly as possible, because this world of new technology and innovation is already upon us. The world has never been more connected and never been more data collaborative as it is today. I can catch up with you today in the most low-cost, fastest, accessible way, because I don't have to spend money on Facebook and on WhatsApp and because of the power of technology and because of the power of data exchange. And so for me, it's about building those mechanisms super quickly so that at the end of the day, we achieve systemic success. And so I think that's going to be the greatest challenge. The innovation is already with us. We're living in it. The regulators, I'm afraid, I do not believe are ready for this. That's what we need to work on in tandem with the innovation, which undeniably is well on its way.
I think that's a quotable quote for this this conference. The more dangerous thing is for the regulators to get on the wrong side of innovation. I think that's one for all of us to take away. Just staying with this topic of sort of the pace of development, what are your thoughts around Internet of Things and 5G? Is that still, for many African countries, a long way away? And how do you think that potentially affects the pace of change in many of these countries? Would you like to start?
Thanks a lot for the question. For me, when I look at evolving technologies, 5G, I think recently there was a mention of investment to start research on 6G, which means the world is moving. Now, Africa got an advantage now, because what has happened is, because of technology, we've leapfrogged more or less. Because when you look at the rest of the world that is connected by a fiber or cable, whatever it is, for Africa, I think our salvation was in the mobile technology that has brought in connectivity and high bandwidth. So it's something that we really embrace, and it's really working well for us. Like in Kenya now, if you look at from the Kenyan perspective, courtesy of our mobile operators, of course, all the major cities are 4G network, and I think recently there was even an announcement to make sure that the whole country will be covered by 4G. So the next play, of course, is now to go into 5G, and I think it calls, especially more or less from a regulatory perspective, for the different governments to work with HEST and ensure that the relevant spectrum is put forth so that our operators can start now laying out the 5G network to be used for the African continent. And when you look at it, of course, it enhances mobility, it enhances the use of, it makes work much easier, it makes life much easier. And that is why we need to embrace high bandwidth technology, so to speak.
I think there's a real opportunity for internet infrastructure to be democratized and disrupted. 3 days ago, I think SpaceX just ran another launch into space where they're testing out availability of broadband across the skies and the spectrum globally. And I think we need to start seeing more and more of that. In my view, I think access to internet bandwidth, the cost of access to internet bandwidth is going to drop dynamically because of the economies of scale and accessibility that can come to. I think we'll see a lot in terms of availability of satellite internet connections at very low cost, and this will be a complete advantage for Africa. But Africa will be readier than the rest of the world in this specific aspect, because there are more mobile phones in Africa than there are people with toothbrushes, believe it or not. People prize accessibility to technological devices in Africa, and it has become basic human need, as important as water is on the Maslow's hierarchy. So you will see a lot of opportunity in terms of our technological capability, technological opportunity on the backdrop of devices, and then the drop in the cost of access through the internet becomes a platform on which products and services can be well delivered and distributed into the hands of the African consumer. But the collaboration that we're talking about, hopefully we'll see more south to south or west to south collaboration so that the rest of the world can converge with Africa technologically.
Right?
So I have the privilege of being able to talk about 5G and talk about FinTech, because I spent a lot of years building telco technology. So as an enabler, I think there's two key things that are happening. One, from the financial services side, FinTechs are the key drivers. They're the pivoting point. We're expecting an exponential amount of services to derive in the next few years. So a lot of exciting things are coming out. So FinTechs are creating new, faster solutions. But when you flip the coin over to the 5G and the IoT discussion, now for a technology infrastructure provider, that's a key enabler. So there's two things that are happening in tandem at the same time. One, from an infrastructure rails, 5G is also providing exponential abilities for service products and services. So there's a lot of innovation that we're going to see from a technology infrastructure perspective. So we're going to see a lot of AI-enabled stuff, a lot of appliances that will start building, a lot more intelligence built in, all enabled through 5G. So that exponential growth will continue. But on top of that foundation, the FinTechs also start to build an exponential curve on different solutions. So when you add exponential on top of exponential, I think the sky is the limit. So personally, I'm very excited at the opportunities that are likely to come, but also a little bit scared by the rate of change that is already happening in the two sectors.
Let me touch on one area where it feels to me that we're still leaving a lot of people behind, and that's this very basic thing of cross-border remittances. There is such a movement of people between all our countries who still seem to either be cut off financially from their relatives or pay inordinate amounts of money for the times in which we live to move money around. What are your thoughts on how we can accelerate a better, more efficient cross-border remittances?
Maybe in general, just to talk on sustainability for me in terms of all of this technological innovation, but particularly for FinTech, would be the challenge to traditional financial services players or banks who fail to do anything about this, and the new opportunity for sustainability, which will include remittances and a variety of other things, is that in the first place, citizens are the world's first financiers. We finance the governments in the tax that we pay. We finance private sector in the consumption that we provide. And we finance the world in terms of the loans that we take. Today there's about 12 trillion in investments that is a negative interest rates that the world is doing nothing about. 350 trillion, which is sitting in equities and bonds that the world has not leveraged enough for sustainability. Traditional banks clearly have not been able to harness this for a spectrum of balance in terms of wealth allocation. What are we as FinTech innovators going to do with citizens' money? Because this is our money. How are we going to make sure that we enable cross-border transactions or global transactions, whether it's in the form of Libra? I guess this is one of the things that Libra is trying to do. But look, I'm not going to touch on that. I know it's a controversial conversation. But it also gives an opportunity for Africa on the Free Trade Continental Agreement, where we can connect as players on interoperable systems to make trading and financial transacting much better. But it is this responsibility on us as ecosystem builders, as regulators, to ensure that we provide the best possible value on citizens' money. It is not private sector or government money. It is our money and must be delivered to us profitably, innovatively and diversely. And that's what sustainability will be about if we're going to talk about SDGs.
On the topic of sustainability, a question from the audience that certainly I also have in my mind is the sheer cost of data, the cost of smartphones. How big a problem is that still in making digital access a reality for a lot of people?
I think just speaking from an African perspective, this is an innovation that came about, and it's a problem that was solved a while back. Because when you look at the access to mobile financial services in Africa, actually still features on driven. So we utilize the USSD technology as much as the mobile phone SDK to be able to transmit and to be able to transact. So the issue of smartphone penetration has not been a major issue in terms of providing the basic services. But of course you are right from the perspective of now being able to layer on more lifestyle products and services to enable more enhanced features and services for customers. We need to be able to upgrade. So as we speak now, I think it's a penetration rate of about 70%. So as we go by, of course the cost of smartphone is going down and the penetration is increasing. And also we've seen a huge leap, and especially in terms of the cost of data coming down significantly, and more so with the fiber that's now all over Africa. Because I think a while back there just used to be one fiber route on the west coast of Africa, but now there are a number of fibers that are terminating into the African continent. So data rates have gone down. Smart penetration is increasing, and when you look at even the majority of the innovative financial solutions that are being driven now in the African continent is via smartphones through the use of the app. When I see what is happening here, especially in this side of the continent or this side of the world, that has already something that we're already doing in Africa, and we're enjoying the benefits of that.
So, for me, the issue of cost for consumers is a key theme. I think it's across the African continent. The higher we drive financial inclusion, we now start going into lower segments. Now, on the topic of lower segments, cost becomes a very sensitive matter. So, irrespective of whether it's the cost of the transaction or the cost of data, it's still a cost to the end user, and specifically, the specific target market, being the mass segment, is, I think, a key area that we all have to solve. So, for me, the theme is, I honestly believe that the cost of smartphone, the cost of data will continue to drive down with more innovative players that will be basically coming on board. But I think the bigger issue, which Alex has touched on, majority of our customers are already on USSD. And that's where the majority of the mass segment is currently sitting. Whether USSD solves lifestyle and higher end services and experience, that becomes where the challenge point is. But I think we all have to be cognizant of the consumer journey. Bring them into the system first, then start building lifestyle as a secondary area. So the likes of Kenya, the likes of Zimbabwe, penetration is extremely high for financial inclusion. If you take Zambia, for instance, 30%, we still have quite a lot of work to do on bringing the consumer base on. But while we do that, we need to be cognizant that we have to build more advanced services on top of this, on top of our platform. So smartphone becomes a key enabler for ensuring that the quality of the service and the lifestyle is built in as we drive the initial inclusion, financial inclusion.
Yeah, and maybe just one last thing on that is the demographics, right? So before, you have low literacy levels, but that's part of the people who have the money now are an older generation. Your young people are being born at a time when mobile and technology was readily available. So I think they will want smartphones first. They will transition from USSD and feature phones very quickly to smartphones. So I think that will drive up penetration, that will drive up demand for data, and then you will start to see rates go down.
Is that already happening in Rwanda?
It's already happening in Rwanda. And we've all gone the extra mile to even, bring in the made in Rwanda smartphone. Like, let's start to actually manufacture phones here. It's still at a higher price point, but the more you increase availability and then have a layer on financial services to make the phones available, then you're able to increase penetration of devices.
It's almost time to wrap up. So I think late afternoon, the sun almost setting. I think it's time for some prophecies. What does the future bring? What is your big prophecy for Africa this afternoon? I think let's start from the other end. Wayne, why don't you start?
So short to medium term, I see collaborations around FinTech. I'm not really so excited about that. FinTechs, mobile money players, so a lot of interesting solutions will come out. But I think the longer term play, I see a lot of effort that's coming out of the telco and the technology space. So Internet of Things is a big play. And I also see FinTechs building a lot of fancy smart solutions. So my prophecy, in 20 years, FinTechs will probably be collaborating with perhaps your fridge or perhaps even your car. We'll be building solutions for your cars to be able to actually communicate and actually resolve some of our current consumer needs.
Natalie?
Well, Africa will, in a few years to come, a couple of centuries, be home to the second largest population in the world. I think it's a real opportunity in terms of financing for the global world. First of all, for Africa, for us to be able to build the breadth of the ecosystem, not only bringing consumers together, but bringing the supply side of the system into the financial services network. And for me, that will be beyond financial inclusion. We are probably looking at some of the fastest growing fintech unicorns coming out of the African continent, but these will be the ones that will be built on the lens of ecosystem development and great value chain partnerships. And I think we'll start to see a lot of an evolution of this coming to the fore. So it's going to be an exciting time in terms of financial services in Africa, but also I think it'll be the last nail in the coffin for the banks, particularly those operating on the African continent. They will serve mostly maybe for governance innovation and to help the regulators build the fundamental systems for systemic, railroad. But it's going to be truly exciting and, an invitation, for global innovators out there to come and collaborate on the continent because we're just about to blow this off.
Fantastic. Alex?
I'll speak as a banker. I see a world of possibilities. Of course, Africa will arise. You talked about remittancy. Right now we have borders across our nations as they are known. I see a future whereby it will be borderless. You'll be able to transfer money from any corner of the continent to anywhere else. We are training more and more engineers, so data scientists will be critical for us in terms of building innovative products and services, driving customer centricity around it, and then a shared infrastructure kind of model that will be available for all to use. Of course, you talk about the cost of data and smartphone penetration. We'll have over 100% smartphone penetration. Then the data will almost be a commodity, so it will be cheap as you can think about.
Truly the fourth industrial revolution happening under our noses.
It's true.
Tesi?
I have 15 seconds. So I think we'll be tech neutral. We won't care, are we using USSD, blockchain, what, like that will all just fizzle out and people won't see that. I see the evolution of platforms. So I won't necessarily be tied to KCB or MTN or telco. It'll just be like, who's giving me the service that I need and what platform can I access this from? And even move beyond financial services. That's my prediction.
Thank you to the audience. Thank you so much for sharing this almost hour with us. I want you to go out there and tell everyone they've missed one of the most exciting things happening in our industry today, which is the fourth industrial revolution unfolding in Africa as we speak. To our panelists, thank you very much. A big round of applause, please.